Hey everybody, Will Fix here. Sorry for the late video today, but let's get straight into it. Watch out for scams going on if I leave the, if I leave the comments on. Because there's always somebody in there trying to scam you, draw you away, or, take your money some kind of way. So beware of that. By the way, if you end up liking this video, please give me one of those. That helps the algorithm. Then a lot of people see it, and that's really awesome. And if you hit the subscribe button for me, that'd be cool. Also, I'm going to be going over my article I just posted in Twitter. I'm not trying to do that all the time, but I just put that together, so why not use the same content? If you want early release stuff, the Twitter, subscribe to that Twitter page. Now, before I go into that article, I wanted to talk a little bit, all of this news about ETFs, electronic traded fund. Now, you know what the attribute about that's so exciting, is that a regular stockholder can buy it, just opens up the market. Well, there's other products available on the stock market. Like there are things called ETPs, electronic traded products. So ETF, electronic traded fund, ETP, electronic traded product. They're so similar in so many different ways. I believe probably the biggest difference is an ETF, you can do calls and puts. And that is a huge way to manipulate a particular fund. I believe the electronic traded products are, there's not, I don't believe you can trade calls and puts. I may be wrong on that, but it's such a vague difference between these two. So people are talking about ETFs, but there is already on Fidelity an ETP, electronic traded product, for XRP. There's stuff already available for trading on the stock exchanges. Now, I want to give my opinion about the ETFs. My sentiment over the ETFs, like when I originally spoke about it to you, was I don't think it's a good idea. I think that when there's one approved, it will pop the price, but then it will ultimately be the demise of, could be wrong, but it could be the demise of the coin. Too many people can start to manipulate it, and then it just becomes a game to take the money from the people by manipulating the market. And I have a feeling that's what's going on even right now. What if you could move the market by just putting in an application for starting an ETF? So me and you got together and said, hey, let's get together and say we're rich, let's start an ETF. And we get an application together, and we don't even care if it's right or not, because that's not our goal. What if our goal was just to move the market just because of the news? Well, then we can just buy some. We can start to move the market. Then it's a rug pull when it doesn't happen, right? And then we can have, you can short the market on some exchanges. So you can short the market and on that rug pull and not even ever intended on having one be implemented on that day. You may do 2 or 3 rug pulls before you actually get one. Then once you get one, now you can manipulate even further the market. And what it's going to probably do, probably tomorrow, is it'll either spike up or down, won't it? If it's approved, it's going to spike up. If it's not, it's going to tank. Now, all of the people that are going to sell tomorrow based on that news, probably people prepared already to buy again. So what you do is you have this application in for an ETF, and you prepare to purchase as you disappoint everybody and they sell. So you just prepare your money to purchase at a lower price right here at the beginning of the 4-year cycle bull market. So what if that's the plan? I'm not saying it is, but I wouldn't doubt it, because just imagine yourself in the player of billions of dollars, and you're sitting around a table saying, how can we make some more money? And you're not, you don't have very many scruples. Well, that would easily come up, wouldn't it? That's such an easy way. It's just to cause disappointment in tons of people. So to get them to sell. Don't sell. Now, if you do, you need to sell probably tonight. Pick a percentage to sell in case it tanks so you can buy again. Maybe 25%, sell a portion if that's what you want to do. What I'm going to do is absolutely nothing. I'm not going to respond to their games. What I'm going to respond to is all the content we've been looking at for XRP, XLM, XDC, Hedera, I was going to say HBAR, Algorand, all of the ISO coins, all of the content that's been put out about that. That's why you're in it. That's why you're in it, because that utility run, that's still to come. I would just, what I'm going to do is absolutely nothing. Now, what I do have is a percentage of my portfolio in 3 commas, which is trading in the volatility. Down cost averaging bot. That's done me very well. The last month, it's made me over $1,000. It's doing me very well. You might want to look into that. I have a link for that if you want to check it out. There's plenty of videos to teach you how it works. But anyway, I want you to let's look at the article real quick and see what I wrote there on x.com today. XRP has an already trading ETF-like product on Fidelity. It's called an ETP. While there are already existing ETPs like the 21 shares Ripple XRP ETP, the AXRP, and the ETC groups, physical XRP, GXRP, the recent discovery of the XRP ETP on Fidelity investment platforms has sparked a wave of enthusiasm. Although the XRP ETP on Fidelity has been confirmed to be an existing product launched by AMUN AG in 2019, the overall sentiment remains optimistic. The introduction of Valor's XRP ETP in December of 2023 and the potential for more institutional interest in XRP's ETPs could be the catalyst for a bullish momentum in the XRP price. In conclusion, while there are already XRP ETPs in the market, the potential launch of new products and the growing interest from institutional investors could be a game changer for XRP. Here's a little more if you don't know what I'm talking about. There's a lot of talk about these ETFs. An ETF, or exchange traded fund, is like a big box of assorted chocolates. It's like a type of ETP, which is an exchange traded product that tracks a specific index or a basket of assets, like a well-diversified investment portfolio. ETFs are typically traded on stock exchanges and are known for their transparency and cost effectiveness and their liquidity. On the other hand, an ETP is like a box of chocolates, but with a few extra surprises thrown in. It's a broader term that encompasses not only ETFs, but also other types of exchange-traded products like ETNs, which is exchange-traded notes, and ETCs, exchange-traded commodities. ETPs can be a bit more complex and diverse than your average ETF, but they still offer the convenience of trading on stock exchanges. So to sum it up, an ETF is a type of ETP, but an ETP is not always an ETF. Two ETFs are like a well-diversified investment portfolio, while ETPs can be more diverse and complex. Number three, both ETFs and ETPs trade on stock exchanges, but ETPs can include a wider range of products. So is that about as clear as mud? They're very similar, and it basically, the ETP allows you to trade it on a stock exchange, not hold keys, not have to worry with custody, things like that. Same advantages as an ETF, except for the ability to buy calls and puts. I believe that's the biggest difference. Now, if I'm wrong there, you guys will know more about it, because lo and behold, there'll be an ETP out there where you can buy calls and puts, and I was wrong. So it's okay if I'm wrong. But I just thought it was really interesting that there's already a fund you can trade, like a stock that's XRP, that follows XRP. I mean, who knew? I didn't know that, just doing some research today and found that out. Hey, if you like this, that's cool. Like and subscribe. Subscribe to the channel. And also to my Twitter page, or x.com, willfix7. And we'll see you tomorrow.